nuclear sites. That was, of course, according to a Washington Post report.
Prime Minister Modi inaugurates the 8th edition of the India Mobile Congress. Akash Ambani says Reliance Jio is laying the groundwork for national AI infrastructure. Sunil Mittal calls for laws to ensure satellite companies pay license fees and buy spectrum. Kumar Mangalam Birla says Vodafone Idea has kick-started the capex cycle after the recent fundraise.
Hyundai Motor India raises 8,300 crore rupees from anchor investors, sees subscription of 20% on day one of its IPO. This is the largest ever initial public offering in the country. Hyundai Motor tells CNBC-TV18 it's expecting to grow volumes, market share and profitability with some of the big capex which is lined ahead. Also plans to launch an electric Creta later this financial year.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to prepare you for the next trading session. I'm Reema Tendulkar and with me is my colleague Prashant Nair. Hi.
Reema, hi. What a quite a kind of session, right?
Yeah, but lots bubbling underneath the surface.
Lots bubbling, and we will, of course, touch upon some of this stuff over the next 20 minutes or so. So we got the big news, of course, covered, the key developments on Dalal Street. And of course, some of the top corporate voices and events to watch ahead as well. So there is a fair bit which is lined up.
All right, but first the market action, right? You started off saying it was quietish.
It was quietish, and I think the markets, by the end of it, almost unchanged, right? At least on the Nifty. Broader market also, I mean, actually it was, couldn't really make out too much from today's price action, except maybe just pockets which stood out, right? I mean, so for example, real estate as a pack stood out. Names like DLF, there were a few others as well. Small caps did substantially better than the mid caps, so the Bank Nifty or the Nifty. Broking stocks, JM and some of the other names which Vivek will talk about in a bit from now, those did very well. Advanced decline was 1:1, so there was not very much to differentiate between the number of stocks up and down. The big cues ahead, oil prices are dropping even as we speak. And I think can we see prices sustain at lower levels, closer to 70 than to 80? I think that's going to be a big one. And of course, dates for Maharashtra state elections. I think that is the other one which should be important. The dates, of course, which should come out from the Election Commission in a bit from now. Reema.
As you said, a lot of segments did well. One was real estate and the other one were all these brokerage-related capital market plays. It was led by Angel, which came out with their Q2 numbers. We'll talk more about it. But they lifted up Motilal, Oswal, 5paisa, SMC Global. So that entire pocket was very, very active in trade. On the way down, Reliance Industries was under pressure. That was down nearly 2%. But it was offset to a great extent by the performance of ICICI Bank. So ICICI Bank held up the other end of the market with a gain of close to about 2%. But we'll talk all about the top stock movers of the day. Vivek is standing by. He's at the big wall. Vivek.
Well, thank you so much for that. Quite a few movers in today's trading session. First up, the top Nifty gainer, that was BPCL. And in fact, today, all of the OMCs did very well. Crude oil prices, falling lower. That gives comfort as far as marketing margins are concerned. So all of the OMCs, BPCL, stood out over there. The second stock, one that you alluded to, Angel One. Very strong set of results. Management going ahead and retaining the EBITDA margin guidance of 45 to 50%. 18% higher as far as Angel One was concerned. The third stock on our radar, Network 18. Tomorrow is the record date as far as the merger of Network 18 and TV18 is concerned. Today, the stock ended higher by almost 10%. Bata India, yesterday you did see an initiating note coming in from IIFL. Today, for the second day in a row, you actually saw Bata moving higher in the session. But on the other hand, quite a few stocks saw quite a bit of selling pressure as well. HDFC Life, in fact, after the results, quite a bit of a sell-off, almost 4% lower as far as HDFC Life was concerned. It also dragged down a few of the other life insurance names. Divi's Labs, during the trading session, our news came through that one of the company's key clients lost an appeal as far as denying entry to a generic competitor. Divi's is a key supplier over there, almost 2% lower as far as Divi's was concerned. The entire metal pack was also under pressure. Names like JSPL, Tata Steel, SAIL, NMDC, all of them under pressure, 2.5% low amongst most of the metal names. And lastly, Bajaj Finance, amongst the F&O space, this was amongst the top laggards. So quite a bit of selling pressure, ended low by close to 2.7% in the session today.
All right, Vivek, thank you very much for that. Jai Bala of Catch the Chaos is with us. Siddhartha Khemka of Motilal Financial Services is also joining us. Thanks both of you for being here. And we'll talk about broking companies here in just a bit. But I wanted to get a quick word on the market for viewers. Jay, it's a bit of a, one can't make out whether this is a pullback. I mean, when I say pullback, I mean from lower levels on the way up, or are we still in a sideways, kind of time frame? What's the view near term?
Yeah, fair enough, Prashant. I'm still anticipating a bounce back, which is a counter-trend rally to somewhere close to 25,480 for the Nifty to 25,650, and likewise for the banking index to about 52,475 to 52,950. That's my preferred path. I don't expect the October low to get broken first. I would first see furthermore a bounce to come through, and then selling pressure pick up for the market. From a slightly higher time frame, I'm anticipating this correction to continue to somewhere close to the post-election low of about 21,800 and change. Like I said last week, there's no change in that view. But if 24,694 on the Nifty were to break first, that will be an short-term unexpected move, or a very short-term unexpected move, and I'll have to rethink. But I don't think we are digressing from the path of a sharper correction to somewhere close to 21,800 and change.
Let's get to the stock-specific action then, and it's Angel One that soared 16% on the back of a very solid Q2 performance. It saw an improvement in its operational performance, which helped beat the street expectations on profits and margins. Vamakshi is here with the details. Vamakshi.
Well, absolutely, Rima. A solid performance coming in from Angel One. Revenue was slightly lower than estimates, coming in at 1,515 crores. EBITDA margin, however, saw a very sharp improvement of 1,089 basis points to 44.4%. Net profit came in 45% higher sequentially and beat estimates. The growth in revenue was largely being driven by the interest income, which was up nearly 22%. Gross broking, however, was rather muted at only 2% sequential growth, but the operational performance was largely better, mainly on account of IPL expenses that were present in the first quarter and were not present in the second quarter, and that is why you're seeing a sharp improvement as far as the margins are concerned. The company also held a conference call earlier this morning, and some important takeaways coming in from there as well. They say that the stricter F&O norms may impact 13 to 14% of total income from the client. Rise in brokerage has been done to offset impact from shift to the true-to-label fee structure. There are also diversification into distribution and several other businesses, which will be an important part of their growth strategy. As far as their wealth management and new businesses are concerned, they're expecting a burn rate of almost 2 to 2.5%. They're expecting the new businesses to break even in the next 1.5 to 2 years, wealth management business to break even in the next 3 years, and they believe that they will be holding on to the EBITDA guidance of 45 to 50%. So overall, it's a good set, good commentary coming in from the management, and resultantly the stock was up in trade.
Siddharth, would you go out and buy Angel One or any of these brokerage names? I know you can't talk about Motilal. Yeah, go ahead.
Hello. Yeah. So I think results were quite positive, and it's I think across the broking houses, I think the numbers will come strongly because of the high volume. The only overhang which was there on the broking industry was the SEBI circular, which kind of restricted the derivatives trading in a large way, and so in the near term there could be some pressure once the new rules kicks in by the end of November. So I think Jan, Feb, March would be very crucial in terms of looking at how the volumes in the derivative segment adapts to the newer rules with the higher ticket size, just one weekly expiry per exchange. So our view is that in the long term, volumes will recover after the initial hit, and that is where the brokers as well as the entire capital market value chain tends to benefit. Angel One, we believe, so we are positive on Angel One. We have a buy rating, and before the results, we had a target price of 3,500, which will get revised today. So overall, we believe that it is well positioned to grow businesses across parameters, be it client acquisition, number of orders, or its MTF book, which is all set to grow Additionally, over the long term, as Manakshi said, AMC business, wealth management business will also start contributing to the revenues, bringing it more structurally linearity to the overall growth. So yes, very positive results. And on the long term, we have a positive view. As I said, in the near term, next 1 or 2 quarters, we'll be watchful of the impact of the new regulation from SEBI.
That'll only show up mid-November onwards. Jai, do you like any of these names?
The broking stocks, you mean, right?
Broking, yeah. Broking,
Yeah,
even
I think,
BSC.
Yeah. Oh, even BSC Limited. Okay. I like, Angel One at current levels. Motilal, Oswal on a very short-term basis, it's looking stretched and probably on a last stretch. And, Angel One has been an underperformer for the whole of 2024. And I think it could go back and test the all-time highs. The price structure is such that it's an incomplete move that we saw the highs of early 2024 for Angel One. But the risk rewards, rather the rewards might be good, but the risk that you need to take for holding on to the record highs, I don't know if it will get choppy or go straight up, one way up. So you need to be allocating carefully. But I think there's definitely more upsides to work with for Angel One.
Let's talk about HDFC Life that fell nearly 4% after the growth came in at the cost of margins. Yash is here with the details. Yash.
Well, Reema, the management in the previous interview had said that they would focus on growth even if that comes at the cost of margin, and that's exactly what's transpired in the second quarter of FY25. You see the growth numbers, they're pretty strong, on a year-on-year comparison, as well as to the number that we were working with, to the number that the street was working with. New business premium largely in line, a growth of 14%, total annualized premium equivalent or total APE that saw a growth of 27%. It was much ahead of the estimates which CNBC-TV18 was working with. Retail annualized premium also much ahead of the street estimates, growing at 31% in the second quarter of FY25. Value of new business saw a slight miss to the estimates that we were working with. We were working with a number of 958 crore rupees. The number that came through was 938 crore rupees. So just about 20 crore miss, still growing at 17% in the second quarter. If everything went well, then what hurt the sentiments post the second quarter results? It was the margin number which the company released. The margin that came in down 200 basis points at about 24.3% versus 26.31%. Also, as per the number that we were working with in terms of estimates, we were working with 25.37%. It came down to about 24.3%. Now, why is this important and it became an important factor today? That's because the management had guided for 26% margin for FY25 plus minus 100 basis points. With the second quarter, it slipped out of that bracket, and that hurt the sentiments, explains why the stock was down in trade today.
Thank you very much for that. Now let's talk about HCLTech. They reported a strong quarter, a beat on the revenues, a beat on the margins. And this came in as a bit of a relief because TCS last week had reported muted set of numbers with the company facing certain client-specific issues in particular verticals. So revenue growth at 1.6% quarter on quarter, margins expanding by 150 basis points, and the company went ahead and raised the lower end of its top-line guidance. So the new guidance, revenue forecast for the year is 3.5 to 5%. Margin guidance remains unchanged. What the company said is that BFSI recovery is now more broad-based. In the month of August, it was North America leading growth in terms of BFSI recovery, but now even Asia, Europe has picked up in terms of BFSI growth. Now, the stock closed with a marginal gain, less than about 1%, but in the last 3 months, the stock, remember, has moved up 18%, outperforming the Nifty IT, which is up 9%. So that explains why we didn't see a blockbuster reaction to the stock price. And secondly, as HSBC says, valuations for HCLTech are now in line with TCS, which limits further re-rating from here on. But all in all, Q2 was a strong set of numbers.
We won 12 deals from services and 8 deals from software, bringing the total to 20 deals in Q2. Our total booking TCV for Q2 stands at $2.229 billion. Looking ahead, our pipeline continues to grow robustly, demonstrating a strong and well-distributed presence across business segments, verticals, and geographies. GenAI presents a particularly exciting opportunity, growing at a commendable pace.
Okay, well, that's HCLTech. Hyundai's IPO, of course, opened today. It's the biggest ever in the country so far. Sudarshan is here with details about what you should know about the IPO. And Sudarshan, how much done already on day one?
So that's correct. So the first, talking about details about the IPO, it's the biggest ever of the Indian market, and Hyundai Motor India for rupees 28,000 crore IPO has raised more than rupees 8,300 crore from anchor investors at the upper end of the price range of 1865 to rupees 1960 per share. And some of the major anchor investors include Government of Singapore, Fidelity, ICICI Prudential Mutual Fund, HDFC Trustee Company, SBI Mutual Fund, Vanguard, BlackRock and others. And for public, IPO has opened today and will run till October 17. Now today, as of 3:30 p.m. on the first day of the issue, total subscription is 0.2 times, or say 20%. Retail again at 0.2 times, employees at 0.7 times, and NIs at 0.1 times. Listing on the stock exchange is expected on 22nd of October. The IPO is a fully OFS issue, and through this, promoters are looking to offload 17.5% stake, totaling 14.2 crore shares. And following the issue, promoter stake will reduce to 82.5% from current holding of almost 100%. Now, talking about the book details, IPO allocation includes 50% for qualified institutional buyers, 15% for non-institutional investors, and 35% for retail investors. And for employees, company has announced a discount of rupees 186 per share to apply in the IPO. Now, shifting to the internals, the earnings per share at the issue price stand at rupees 62.56 with a price to earnings ratio just above 26 times. So, where do financials of the company are in comparison to the peers? On revenue front, in FY24, the revenue of Hyundai India was rupees 70,000 crore against Maruti's rupees 1.41 lakh crore and against M&M's revenue of rupees 1 lakh crore. And on margin, it's almost at the similar level of Maruti, that is at 13%, while M&M is leading the pack at 15%. The valuation metrics suggest that both Hyundai and Maruti have a PE of around 26 times, while M&M is slightly higher at 27.4 times for FY25. So what do brokerages say for the IPO? Most brokerages recommend subscribing to the IPO for long-term gains, noting that while the issue appears fully priced, they anticipate healthy double-digit returns over medium to long term. Lastly, if you can talk about the grey market premium, we understand the premium currently stands around rupees 65 against a premium of more than rupees 550 that it saw in the last week of September.
Siddhartha, a quick word on Hyundai. What are you telling all your clients? Subscribe or avoid? Siddhartha? Okay, that line is a bit frozen. Jai, in the auto pack, which is a stock that you like, because it just appears that now that there is an option for investors to play the Indian automotive industry story with Hyundai, some of the froth or some correction has played out in names like a Maruti Suzuki, etc. What are the charts telling you?
The Nifty Auto Index is one a green point for me, and it's holding up quite well. And except for Tata Motors, most of the names are either good or at least just middling. I think Mahindra is the best name out there. I think further higher highs to fresh record highs are due for it. But I don't know if it will last much beyond that. But right now, the auto index still remains at a stable and positive place for most of the names, barring Tata Motors.
Okay, we'll leave it there. Thank you very much for joining us with that. We'll, of course, come back to both of you later. Jai and Sid, thank you for your time. Well, we'll come back with Nimesh on D Street Chatter, the stocks that he's got on his radar. That's coming up in a bit from now.
Welcome back. You're watching Markets Forward, and now let's get to the corporates that we chatted with today. So first up is Healthcare Global Enterprises on unbundling of prices. The management said that there is a need to make sure that there is transparency in the system and that unbundled pricing by hospitals is not taking place routinely. That's not it. The healthcare provider also hinted that a stake sale by CVC is likely to take place in the next 4 to 6 months.
Well, Gopal Snacks was with us as well. They've guided for a revenue growth of between 13 and 15% with margins between 11 and 12%. Further, the company is bullish on wafer sales. It is expecting sales of 200 crore rupees in the current year and 350 crore rupees by FY27. Gross margins for wafers have also been better, according to the company. Okay, that's a sliver of some of the management commentary that we had through the course of the day on the channel. It's time for D Street Chatter. Nimesh is here with stocks that are on his radar. Nimesh, over to you.
Hi, Prashant. Well, the Nifty was under pressure. The broader markets did well thanks to FII buying across broad, mid and small cap stocks. But in terms of individual names, the first stock is Mastech. A big recovery in that stock ended 4% higher because there was a large block, 2% equity got changed hands. I understand there was a clean out trade from an FII, so they've sold out. Some HNIs and some domestic mutual funds were buyers in today's block deal. The second name is JM Financial. Well, the entire broking stocks did well. JM stands out on back of FII buying, and additionally, the street is anticipating some corporate development as well in JM Financial very soon. The third name is RK Forging. We highlighted the UBS initiating report in the morning. Stock reacted to that, plus they were buying as well. So there was delivery-based buying at leading FII desk in RK Forging. And the last is Suzlon. For the last couple of days, Suzlon is under pressure on back of selling pressure. Even today, I understand some long-only funds were active sellers, so expect high delivery volumes on the sell side in Suzlon.
Thank you very much for that. And let's wrap it up with the key events to watch tomorrow. Vamakshi is here.
Well, thanks, Rima. Lots of events to watch out for tomorrow, but keeping an eye out on the cues first. UK will be reporting their CPI as well as PPI numbers. Lots of stocks also on our radar. On the back of numbers, we will be watching out for Bajaj Auto, L&T Technology Services and Emphasis. Nifty 500 index rejig is also scheduled tomorrow. So NSE will be adding Acom Drugs. They will be excluding TV18 Broadcast, mainly on account of the merger. Sudarshan Chemicals will be another stock on our radar. That is because a board meeting is scheduled tomorrow in order to consider fundraising plans. Pondy Oxides, there's a stock split that will take place tomorrow from rupees 10 of face value to rupees 5 per share. Apart from that, lots of other events to watch out for. Omar Abdullah will be taking oath as Jammu and Kashmir's CM tomorrow. Hong Kong Policy Address 2024 is also scheduled. And lastly, we will be watching out for EU Gulf Cooperation Council Summit, which begins in Brussels. This is important. That is because it's the first ever summit to be held between the EU as well as the GCC.
All right, Vamakshi, thank you very much for that. It's a wrap on this edition of Markets Forward. We are back with more news and updates on the other side. Stay with us.